All right, we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. We're going to look at a couple things that you need to watch out for this week if you're, interested in, or sorry, you're participating in the crypto space at all. Okay. We're talking about that. We're going to look at a lot of other news updates that have happened in our live stream since Friday. Again, we do these Mondays through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever you're live. We're going to answer some of your questions in the live chat here. Check out the crypto markets and a whole lot more. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step start to finish, then head on over to dappuniversity.com/bootcamp to start today. And of course, in case you haven't missed our announcement, we do have the Blockchain Bootcamp 2.0 launching this Thursday. So make sure you hold your spot, the link down below to sign up. All right, so we got people jumping in the chat here. We got Automatic Beats, Code Chap, Above Realty, Adam, Bruno, let's see here, Tebo, Anjay, IT. Welcome. All right, so let's go ahead and jump into this. So you also got Faraj, Kyle, My Crypto Pie, Innocent, Stefan. All right, so let's jump into this. Let's talk about some important stuff that you need to watch out for this week in the crypto space. So, ever since the beginning of 2022, really the tail end of 2021, crypto's getting absolutely hammered. Okay, we've been talking about that a lot in these live streams. If you're brand new, unless you've been living under a rock, that's what's been happening in crypto basically all of this year. And if you take a look around, that's not a crypto specific problem. We're seeing the same type of thing in the stock market. Okay, pretty much every asset is getting absolutely decimated right now. Okay, crypto is highly correlated to the stock market, especially the risk end of the riskier end of the stock market, like growth, tech stocks, all that type of stuff. And we've seen, quite a bit of depression in the price ever since the beginning of the year. So, whenever you have these types of situations, it's either one thing is following the other, or they're, both following the same thing, or it's an absolute coincidence. And I don't think it's a coincidence, and I don't think one's following the other. I think they're both following the same thing, which is basically the broader economy and what's going on with the Central Bank of the United States with, their monetary policy shift that it happened at the end of last year, okay? So, I don't pretend to be a macro expert by any stretch of the imagination. It doesn't take a genius to see that inflation's a problem, that, the Fed's actions with monetary policy have really changed the investing landscape across the board. And, one of the biggest metrics that we're looking at right now is what's going on with inflation, okay? So basically, crypto and other growth-related assets have gone down because one of the big reasons is the Fed has decided to raise interest rates to try to combat inflation. So the whole idea here is that when you have a low-rate environment where it's cheap to borrow money, people borrow money and put it into things that are going to appreciate in value in many cases, hopefully faster than the rate of debt service, basically. So you can borrow money at low rates and you can invest that money through growing a business, through whatever it is, buying other assets, then you're going to take that deal every single day of the week because it's essentially free money at that point. So, that has totally changed since the beginning of the year when, interest rates have started to go up. And the Fed has talked about, its mandate basically to try to keep prices stable and to try to maintain maximum employment. And, for that reason, trying to get inflation down. Now, we've been watching what's happening with inflation since the beginning of the year. We've seen lots of different inflation readings on a monthly basis, okay? And then the market often reacting to those readings. Typically, some volatility has accompanied those inflation readings. The market tends to price in what the expectation is for the inflation rate. You can see it in these futures markets. You can see in all this different type of stuff. But, whenever they actually print the readings, okay, we typically start to see some volatility events in the marketplace whenever those readings come out, depending on what the actual outcome is. If the readings are accurate based on the market's expectations, if they're higher or they're lower, okay. So that's one thing we want to watch out for this week. There's a couple of things, but that's one of the main ones, is basically what's going to happen with the inflation reading this week. So you can see the list of, you see the schedule here on my screen of all the releases of the Consumer Price Index. So what is that? So basically, this is one of the main measures that they use to try to determine how is inflation impacting people and the economy. Now, there's different central banks that are going to use different measures. That I'm talking about just for the United States and the U.S. The U.S. central bank that's going to happen this week. Okay, so you can see the ones that happened in the past. Since 2021 all the way through to here. Basically, the June 22 readings, what we're going to get this Wednesday on July 13th at 8:30 a.m. Those numbers are going to come out. So let's talk about what the market's expectations for these things are. So let's pull this up on my screen here. So CPI report. So the June inflation data comes out this week, with most countries releasing data on Wednesday. Like we're talking about, the U.S. Consumer Price Index is expected to show an 8.8% year-over-year increase and a 1.1% month-over-month increase, which would be accelerations from last month's number. So basically, the market's anticipating that inflation is not yet peaked. Okay, so gas prices and the cost of energy are expected to be the main drivers. All right, as the average price of crude oil was 3.6% higher in June than May. So core CPI is expected to be at a 5.8% year over year, slightly down from May's number. All right, so then basically we see a French, German, Spanish CPIs all expected to stay at or near recent levels. Okay, and the path towards consistent steep rate hikes and quantitative tightening seems fixed for the time being, with last week's strong job report only, bolstering cases for tighter monetary policy. So, the market is expecting that inflation is going to be higher in June than it was in May. And so one of the big reasons for that is basically that, oil prices have maintained high. Of course, what does oil do? One of the main factors is, what does it do to the price of gasoline? Okay, the stuff we put in automobiles, and it's not just about people going to the gas pump and filling up their car. Okay, it's also that cost gets passed on to so many different goods and services. Okay, so if you want to get on an airplane and fly somewhere, well, guess what? The airplane takes fuel. Okay, and so the cost of that is going to get reflected in many cases into airline tickets, right? So I know we've seen airlines have problems. They're booking tickets way in advance, and then the flights aren't profitable anymore. All that good stuff. I get that, right? But we do have other things that are much more volatile in price on a day-by-day, week-by-week basis, like produce in a grocery store. Okay, so you go to a grocery store, you buy, some sort of, I don't know, whatever. It's a tropical fruit. If you don't live in a tropical environment, well, that thing had to get on a truck or a boat or a plane and come from somewhere where it can actually grow naturally, most likely. I mean, it's probably not grown down the street, right? So anyways, that cost is getting reflected in almost everything, and oil being a huge determinant of that. And so that's one of the reasons that, we just expect that the inflation price to continue to be high, because it's really easy to just look at the oil price and be like, look, this thing's kind of not coming down. Like, inflation's probably not coming down. You see what I'm saying? So it's like you can easily spot the factors that have huge impacts on the price, and then start to make a very educated guess that, like, hey, this is probably not the direction that things are headed. So now, why is this important? Well, for two reasons. So one is we have expectations for what the number is going to be. So 8.8%. So if the numbers are significantly different from this, okay, and I say significantly, sometimes talking about even a few basis points off, then we could have some points of market volatility. We've seen this in the past, where we have sort of expectations on what inflation is going to be, and then we kind of, don't meet those, and then the market starts to kind of freak out. And that could happen either way. Like, if inflation's significantly lower than what is expected here, then it could have volatility to the upside, right? If inflation is much higher than what we see here, we could, of course, see some volatility to the downside, okay? So those are definitely things to watch out for. Now, why is it important? Why is meeting expectations so important? Well, the implication there is, if inflation is lower than the market's expectations, then that's kind of a good thing to extrapolate that on to future hopes of the Fed or central bank essentially I'm trying to think of the best words to describe this here. Basically, the central bank, 'cause I don't want to say the wrong thing. Basically, like we can get out of what we're in faster. Basically, this high rate environment where everything's really hawkish, that the markets don't like. Basically alleviating some of that pain, not doing so much quantitative tightening, easing off on the rate hikes. We've seen some of the fastest rate hikes in history. So basically, easing off the gas on all of that. I'm not talking about a complete Fed pivot necessarily, but if the statistics that the Fed is looking for to see that's doing its job confirm that it looks like it's doing their job, it's a good thing in the medium term, for the environment that we're in. So that's one of the reasons we can see some volatility to the upside if, inflation readings come in lower than what the market expects. Okay. So, other things to watch out for sure. Earnings seasons begin. All right. I think this has less of a factor. I think the biggest thing, retail sales are going to come in. There's lots of things to watch out for, but the CPI reports, in my opinion, are the number one thing that there are all eyeballs are watching this week, Wednesday at about 8:30 a.m. Eastern time. So definitely keep an eye out for that. Here's an opinion on some of the themes this week. So basically, CPI inflation consensus is 8.8% year over year, 1.1% month over month. So his view is basically comes in even higher, large dip gets bought. Could be. All right, earnings, mostly financials this week should be okay. European gas crisis exerts downward pressure on risk and the euro. So things could be messy this week. So that's his view. But these are definitely some critical themes to watch out for. So already we can kind of take a look at what's going on in the crypto market. We're kind of back down to some of our previous levels. Of course, we had a push on the Bitcoin price up to about $22,000. So we briefly broke past it on some exchanges. Okay, just over $22,000, but really failed to hold above that level. One particular level that we started watching out for last week. Again, I'm not a big TA expert. I don't follow TA too closely, but I do watch significant levels that I know lots of other people watching, and one of those is this 200-week moving average. So, this was the level that we basically kissed last week, almost. All right. So basically, when we were kind of pushing up of $22,000, when we were sort of at this level, I was talking about watching for 22,500 basically. If get above that level, again, and I'm not a big TA guy, but getting above that level and holding it sends a huge message, to people who do watch and closely pay attention to TA, and that can be one of those things that's almost a self-fulfilling prophecy to start, entering into a stronger accumulation for Bitcoin. So that being said, we are below this 200-week moving average. I think this is one of the longest times we've ever stayed below it. Okay, which is really, we have a lot of firsts in the crypto market right now, right? We've got one of the first times that, really the first time Bitcoin is broken below its prior cycle's all-time high, from many years ago. All right, we broke below $20,000. So that's definitely a first. Not a first time we broke below 20K, but broke below another cycle's all-time high. And it's kind of even worse when you think about it because, inflation's been such a problem since then that, we're talking like Bitcoin's value, inflation adjusted, we're talking about being more like down here. You know what I mean? So, yeah, it's definitely a first. We've broken below this 200-week moving average. I would like to see us get back above that and start to hold it as support before we get too excited. Now, that being said, there's a lot of people talking about Bitcoin already being in sort of accumulation range, and that being one of the things that, precedes the next long-term bull run, okay? But a lot of that's dependent upon Bitcoin finding a bottom. Could we be in the bottom already? Could the bottom have already formed? It very likely could have. We've talked about a lot on this channel about, there's been a lot of bottom signals out there. Funds blowing up, Bitcoin being significantly down from its, all-time high. coming to meet this 200-week moving average. There's lots of signals that could indicate a bottom. Now, it's, in my opinion, it's a fool's errand to try to call the bottom in real time. I'm not trying to do that necessarily by any stretch of the imagination. But if we're talking about things in terms of likelihood, there's a lot of signs that point to a bottom having formed. That doesn't mean that we can't go back down and revisit those lows and continue to bounce off of them. Okay, and as the bottom, it's like roughly speaking, give or take a few, maybe $1,000 even. And it could we see a correction farther down from that even? Of course we could, but I'm trying to be cautiously optimistic that could be it. So we'll see. I'm not getting too excited too fast. Okay, so let's look at another thing that was coming out this week that definitely is somewhat crypto related, and not necessarily crypto specific, but has some relation to crypto. So Twitter shares sink after Elon Musk terminates the $44 billion deal. So Elon Musk has backed out of his deal to buy Twitter for $44 billion. So let's go through this, because this, we've been talking about this some on the channel as soon as it came out, and the intersection with crypto. There are a few key takeaways here, but let's look at the details in the report here. So Twitter shares are getting hurt. They fell 6% on Monday, wiping nearly $1.8 billion off the company's market value. So basically on Friday, Musk's attorney notified Twitter's board that he wants to cancel the takeover. Musk on Monday posted a meme mocking Twitter management over deal's demise. So basically, he has taken issue with the number of bots and fake accounts on Twitter and says the company isn't being truthful about how much activity on the service is authentic. This is one of the things that came out, and there's actually a solution for this with crypto. We'll talk about that in a minute. So Twitter, on the other hand, says that it's given us the information they need to access its claim and spam accounts make only 5% of monetizable daily active users, including its so-called fire hose and unfiltered real-time stream of daily tweets. That's a keyword, monetizable. It's like a demonetize you and you could still be a bot. So the two parties are likely to set for a practical court battle, or protracted court battle. He could be paying a $1 billion breakup fee for breaking. That hurts. Even if you're a billionaire, even if you're nobody wants to lose $1 billion. Nobody on the face of the planet wants to lose $1 billion. Yeah. So let's talk about this in the intersection of crypto. So, we had talked about Musk looking at Twitter as a potential candidate for making it Web 3.0 in some way. Okay, so that does not look like it's going to happen, at least not under Musk's oversight anytime soon. So what were some of the things we were talking about? Well, basically, Elon put out a tweet really early on saying hey, what would it look like if the Twitter algorithm was open source? And we talked about how that was, if you could open source a Twitter algorithm, that would definitely be more Web 3.0 than what Twitter is now. Now, that doesn't necessarily mean that the, Twitter algorithms can be put on a blockchain. That's not what I mean. But if you think about what are the values of Web 3.0, where it's just trustlessness, transparency, decentralization. You don't have to have all those values to be Web 3.0, but the transparency of the algorithm itself is sort of a Web 3.0 paradigm. So talk about if you could basically open source that algorithm, put it on a site like GitHub, where not necessarily a single developer could audit it because it might be too complicated for that, but maybe a really sophisticated single developer, or just the fact of an independent third party can audit how the algorithm works with a given set of data. Okay, and then saying okay, when you put in these inputs, these outputs are always going to show up, and you could compare that to real world Twitter data that you actually experience on the application to verify, oh, this is the actual algorithm they're using. And yes, it works the way they say it's going to work, because, one of the biggest problems with social media and algorithmic curation is effectively censorship, okay? And censorship happens in a variety of ways. One of them is, of course, deplatforming or shadow banning. Like if you post on Twitter and then they don't show your tweets to people, or like shadow banning where that's shadow banning, but like deplatforming, which is like if you make enough people upset, then they just like cancel your account and say you kick you off your platform, right? We've seen lots of instances of this over time, but really the other ways that Twitter can censor is through algorithmic curation. So when you see like all these tweets that come up in your timeline, right? Like how do you know that these are the tweets that you really want to see? Like they could easily promote or suppress things, right? That you don't, and to manipulate, sort of like a view of reality that is not really there. Now, I'm not saying there's necessarily anything insidious behind this, that there's like any malice or like there's a wizard behind the curtain that's trying to like mind control you. But there's a few ways that like, this actually can become a problem. So one is just how algorithms work in the first place, like based upon engagement and, the behavior of the crowd sort of like is a democratized way of projecting reality based on other people's desires and what actually drives engagement, not what's actually out there. We've seen this problem with the elections in the past, or the problems of like human bias training the models that actually curate the algorithms. Okay, so like if you have humans like training these machine learning models, then they basically can make the models look like the people who train them. Okay, rather than how they should actually work, right? Which could lead to a flaw in the system, which can basically distort your view of reality based on what you see in social media. The other thing is like when you see these trends over here, all right, how do you know like this is what's actually going to, like, how do you know that this is what's trending on Twitter? Like they could easily promote or suppress stuff that is not actually doing that. So anyways, the whole point is if you open source an algorithm and you can take sample data and you can audit it, then that helps people trust it way more. Trust is the key here. Trust is one of the big problems with social media nowadays. I think that people don't like. So anyways, drawing that back, the whole Web 3.0 thing with Musk and Twitter doesn't look like that's going to happen anytime soon, unfortunately. But we're seeing other Web 3.0 social media experiments in the space that I'm super excited about. Look at the Lens protocol with NFTs. I do think that we can have some sort of Web 3.0 social media application over time. We just have to have the right incentives for people to use it. And that's one of the reasons I was so excited about Twitter, is because, well, you've got a social media app that already has users. You don't have to make people switch. You can just change the machinery behind the hood, and you've already got the network effect of all of Twitter's users inside the application. But doesn't look like it's going to happen with Musk. That doesn't mean somebody else couldn't attempt the same thing, but there's only so many people who can pay $44 billion for Twitter out there. And yeah, we just lost one of them. So let me know what y'all think down in the chat below. So he says he's been buying the dip, LOL. Please make a video on creating a non-custodial wallet. Interesting. It's amazing how much discussion about the Fed and the fiat markets in the context of decentralized consensus discussion stop caring about what the Fed does. Well, unfortunately, we still are in that environment where you cannot fight the Fed. Like it or not, this is the reality that we live in. So Sage thinks that Musk is going to make his own social media company. So Golan thinks he got deplatformed from Twitter. So Maj, I hope that's something I'm saying it right, says that he was willing to spend $44 billion on Twitter, so yes, it's safe to say he will keep pursuing his own social media platform, maybe with Web 3.0, maybe. So, Liminal, I hope I'm saying that right, says someone needs to implement content signing. That is basically signing content against well-known public keys to prove provenance. To improve provenance. If the signature doesn't match, the browser throws up a content warning. So that's another thing about Twitter is the spam bot problem. So basically, that's another way that Web 3.0 can improve this problem. And this is a way that we don't have to use scalability bottleneck of blockchain. Like the scalability bottleneck of blockchain doesn't impact this problem that much. So basically, we could have some sort of digital identity that proves that people are human. All right. And you have to go through those steps to essentially prove that you're human before you could make posts. Okay. And so that keeps people from basically just having that can really help clamp down the spam bot problem. Now, we have to issue ways for people to sign messages with private keys and then prove those private keys are not actually bots themselves. So that's also a challenging part too. But that is a way that we can also improve this problem. So it says we'll go over properly set up command prompt and start coding on Windows as a tutorial on blockchain. Yes, definitely. We have Windows set up steps inside there. So his name's pronounced Major. Okay, gotcha. Sage thinks there'll be some more dip coming up. Yeah, maybe. All right, great questions, everybody. So that's all I got for today. And as always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so then more people can learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? You can definitely go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you'll take a master shortcut entirely. I actually have a master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. This is the exact system that I've helped other people use. Thousands of people become real-world blockchain developers in a matter of, some of them in a matter of months. And we are relaunching the blockchain bootcamp this Thursday. So make sure you hold your spot with the link down below. All right, so that's all I've got. And until next time, thanks for watching Dapp University.